Hey, good morning. Thanks for joining. We got a question this morning about let's see about Oracle. So I'm gonna do some research on Oracle here. We have a member in the group asking with Oracle and the TikTok news and how it would impact their core business. So I'm just doing some research on that Oracle news. I'm gonna look over it here and I'm gonna answer him in there, but it's gonna be interesting. Let's see how what this deal is all about. So TikTok has signed a deal to spin off its US operations to a group controlled by mostly American investors, including software giant Oracle, a company run by billionaire none other than Larry Ellison. TikTok's hyper engagement algorithm and massive amount of data the app has collected on millions of Americans is set to be overseen by the new US firm, which makes sense because they're trying to avoid the threat from China. So, totally understandable. According to the agreement, TikTok's US algorithm will be retained with only Americans' data. Okay, so that makes sense. So, we'll only have Americans' data. Content moderation rules around what is permitted and what is not will be set by new investor controlled entity. That's really interesting because rather than it being controlled by the US government, they're allowing Larry Ellison and his investment company to control what is shown to people. So that's really interesting that they're allowing someone to control what we're shown. But if this whole thing is about us, then why isn't it the US government setting these standards? But I don't know. We'll see. Yet the underlying algorithm will still be owned by Beijing-based ByteDance with blessing of American auditors. Okay, so Beijing will still own it. With an American majority running the content moderation, concerns about foreign propaganda seem to have been alleviated. Okay, so that was the whole thing. They didn't want China to influence the way people think in the United States. They could sway elections. They could sway public opinion. So that's really important. So they want America to have control over that. But it is possible that the American TikTok might end up censoring or hiding speech that is permissible on the global TikTok platform. I would hope that the U.S. content moderation would allow speech that make Americans owners speech that the American owners might dislike. So super important right here, you guys, because this is exactly the point I was talking about earlier. Is if if the American TikTok is going to show us what they think is right. I mean, the whole idea is free speech, and the global TikTok was really showing us everything in the world. So, under the terms of the sale, let's see how this will impact Oracle. Half the new entity will be controlled. American version of TikTok will be owned by Oracle private equity firm Silver Lake. I'm pretty sure one of these probably has to do with Trump's family. State-backed and firm at MGX. These three will control 45% of the U.S. tech. Okay, about a third of the newly formed. I mean, it doesn't look like Oracle will really see much of a jump. I mean, 45% is split amongst three different firms. So Oracle's business may not see a huge change because of this. Let me see. I mean, we already highlighted Oracle's business to kind of be a little on the worrisome side, especially with their negative cash flow, because with a company that's been around for decades now, especially a software technology company, you want to see positive free cash flow. That's the case with any company. Look at Nvidia, 77 billion. Look at AMD at 5 billion. Look at Broadcom at 26 billion. So these companies all kind of came around at the same time. Oracle is one of the OGs, actually. And for them to be at negative 13 billion is really worrying. Plus, they're raising even more debt. Now, Oracle is so ingrained in our world that it's hard to imagine that we'll ever see life without it. I mean, anything's possible. So I won't count them out fully. But as a whole, I think this bounce on the TikTok news, it may not be the bounce that investors are looking for. It may not be the one that holds. You can already see it's kind of fading. So if we are going to play this bounce, I think we're going to need Oracle to get above 194 to give us a little more confidence. For those of you who tuned in, I appreciate you being on. Hopefully we continue getting more views. You guys already know this is the first week we've been doing this, so it's a little rough start. You know, we don't have that many views in the beginning, but it is what it is. You know, it's just when you start things, they always start slow. You know, the stocks room started with one member, and now we have 400. So this is just a slowly in the making. So for the Oracle question that I got in the hyper chat, I'm going to be making a chart right now. So let's pull up Oracle on TradingView. You notice that I use two different softwares or systems. I use Thinkorswim to trade, and I use TradingView for charts when I'm creating charts, just because I like the way both of them give me a pretty good idea of what the stock is doing. So Oracle 194 is going to be the resistance for breakout. So we're going to place that resistance at 194. Oracle moves quick, so if it does break 194, it could be a good trade. As an investment, I'm still a little skeptical in terms of how much their debt load is. It's not really a super comfortable investment, but as a trade, with given how strong AI is, I think Oracle makes for a good trade. So let's see. Let's respond. So So Oracle is breaking out of that 194 that we set for it. Remember at the beginning of this video, we started saying by saying that 194 would be the breakout point for Oracle. Seems to be breaking out on that TikTok news right now. DeFi Technologies. Let's see what this is. So we have the economic data. We have the consumer sentiment report due in about 15 minutes. So maybe that will move markets a little bit. Deft. Okay, let's see what this company is all about. So we're getting a question about DeFi Technologies here. So we're looking over Deft. Let's see. Okay, so not a very consistent chart. There's not a lot of evidence of buying here. It's coming up on a really significant support. You guys will notice, in the morning time, a lot of traders will be going crazy. They'll be buying and selling. It just depends on the kind of trader you are, and it depends on the kind of market conditions that you're in. Given the fact that, we're moving sideways for the past few weeks, there's not a lot of action going on. So there's not a lot to pay attention to. You just have to buy quality names and you don't have to rush into trades in the morning. This is one of those markets where you really want to let things develop. That way you can kind of get a sense of where everything is by end of day before you start adding or jumping out of stocks or anything like that. That's the beauty of swing trading, is that it really allows you to kind of take your time and not stress over like every single candle throughout the day. Like I don't sit there and minute watch. I don't sit there and look at candles like all day long unless I'm day trading, which is, a rare occasion that I do take a day trade. But in reality, like the beauty of swing trading is we can catch big moves over a long run, and it allows us to kind of take a back seat most of the time, do research, which is really where most of our trades come from. You guys will notice that I'm so research intensive, and that's because information is power on the market. If you are on the market and you are looking to succeed in the long run, you're not going to do it with candlesticks and charts. You're going to do it with research, and especially when it comes to swing trading. Yes, candlesticks, price action, and short-term flows like option flows will help you day trading. And if you have an edge of some sort, then yes, you can be successful. But it just depends on the kind of trader you are. You have to know yourself. That's the best way to do it. The market has so many ways to make money from it. You can make money from dividends. You can make money from stock trading, short term, swing trading, position trading, and long term investing, options. You pick it. Just depends on what you're looking for and the kind of market that you're in. Anyway, so back to Deft. This is the question that we have. We're obviously, when I get a question in the group or when I look at a stock, the first thing I do is I look at its chart, see if there's any consistency. No consistency in this, and then I go read about the company. It's an investment services company. So I want to know what kind of industry or service it's in. It plans, acquires equity, debt, and other securities of publicly traded or privately companies or entities. Okay, so, and it's headquartered in Toronto. Okay, so it's not an American company. Let's see if they have any kind of fundamental backing. So the company's worth $400 million. They make about $23 to $26 million a year. Very inconsistent revenue and very inconsistent net income. Doesn't look like there's anything special about this company. I'm not sure why he's asking me about it. It's probably just something that appeals to him because of the chart. Let me go ahead and create some supports. support here at 0.77. Uh, Good data or bad? You're asking about the economic data. So consumer sentiment is actually supposed to stay around 53.5. If we look at consumer sentiment, we can kind of see that it rose in December for the first time in like 4 months. But when we look back, we're still considerably lower than we were before the pandemic. So you can see that consumers were much happier before the pandemic, and now after the pandemic, we have nothing. We've been nothing but on a downtrend. So the consumer sentiment report in 10 minutes is likely only going to show a slight improvement, if not just a flat from the last reading, because this is the last reading. This is not a new reading. This is just the final reading of December. So they release, I think, 3 different reports throughout December. And then they finalize the number at the end of the in the final reading, which is today. So we're still down on consumer sentiment. I don't expect any major jumps, but it would be nice to see an improvement. I don't think it's going to make us or break us though. So, and then resistance at 1.70. And another at 2.32. For those of you who just joined, we are just doing a quick analysis on this stock. We got a request from someone in our group on depth. So I'm going to go ahead and give him a brief analysis on the company just so he can figure out what to do with it himself. All right, let's see what's moving so far this morning. So this is my scanner. I like to scan using the scanner. It's super easy. I just go to finviz.com. I go to top gainers, relative volume over one, current volume over one, and that gives me some of the biggest movers among the market. You can see we have 2 pages of them. 90% of them are not going to be good, but I find gems out of this scanner. So you have CCK. This is the alternative signal for CCK. Um, Let me go back to the CC. I'm sorry, CCL. Um, looks like it's breaking out this morning. They reported earnings, so that is that is nice because they based out pretty well around their 200-day moving average. You can see that they popped off of it, and now they're breaking above the 100-day moving average. So they're back above all their healthy moving averages. CCL, let's see how they did on earnings. CCL, for those of you who are not familiar, is Carnival, the cruise. So CCL earnings. Um, let's see if there's maybe CNBC or something. Okay. Record profits, reinstates dividend. Delivered record 2025 profits and revenue, beating guidance on strong demand and disciplined. Oh, I don't know what this is. Um, Strengthened finances, investment grade leverage, robust bookings allowed Carnival to reinstate its dividend and guide to a higher 2026 earnings. Pretty significant stuff right here. This could be a player for 2026. The stock had already been a success in 2025, and now that they raised guidance, reinstated their dividend. So remember, these guys used to pay a dividend and then they stopped. I think they stopped during COVID, and so the fact that they're reinstating their dividend is a super healthy sign for the business, and it means that they're returning money to investors. Yeah, so you could see in 2020 is when they stopped paying their dividend, and now they're paying their dividend again. So super healthy sign for investors. This might make it onto next week's watch list. Let's see. Yeah, so I think we're going to put um, Carnival on our official watch list because it's just the earnings are solid. The company raised their guidance and they reinstated their dividends. So back to this. And so SPY today needs to close above 680.74 to regain the overnight uptrend. What else is moving this morning? We have BioMarin Pharmaceuticals, pretty big mover. Lunar, aerospace and defense. This could be a good one. This could be a really good one. We're going to keep an eye on Lunar. XPEV. This is a Chinese car company, EV company to be specific. IRNBE. So these are kind of in the same industry. APLD. So we're seeing a comeback from the higher risk AI related stock. So this is data centers, this is energy, this is energy. It might be Oracle that's helping them move higher. So Oracle is one of the top movers today. And so naturally anything AI related, especially because Oracle's on the higher risk side right now, I think it's helping these stocks move. Micron is continuing its rally. SATS, this is a telecom company. Really good movers this morning. This is actually setting up to be a pretty healthy market so far today. I'm hoping it holds by end of day, because there's a lot of opportunity coming, especially with how long we've been consolidating. As long as we can close strong today, we can have a pretty healthy next week. This is a memory company. I think Micron is helping it push as well. So, so you guys can see what I'm watching. So we'll create the watch list, and then maybe we'll do a little bit of charts on these two. You notice CoreWeave is also moving higher. Lunar, this is gonna be. See, I'm familiar with many of these stocks. I know that a lot of them don't have a lot of strong financial or fundamental performance, but nonetheless, they make for pretty good trades. Uh, Xpeng, the metals company, Rocket Lab. This is a gold miner. This is a bigger watch list than usual, but there's a lot of good movers. Looks like there's some kind of activity from Chinese stocks. Today, you can see that this is out of China, this is out of China. It's going to be interesting to see what catalyst is moving these. Maybe it already came out and I missed it, so I'll be looking for something. But definitely some activity from China stocks. If you guys know what it is, go ahead and drop it in the comments. Or if you have any questions, drop them in the comments or the chat. So looks like the final reading was 52.9. So the consumer sentiment reading was actually lower than expected. It just came out 3 minutes ago. So we thought it was going to be 53.5, but it came out at 52.9. So we still need SPY. SPY needs to close above 680.74 today to regain that overnight trend, but we would still love to see a 681.50 breakout. That way they can, you see, there's not much resistance between that and all-time highs. It could easily make that jump with positive news. We just need that positive news. You know, nothing has been strong enough to move it so far. Give me a second, guys. I'll be right back. let's make some charts on this watch list. So I always like to start off with the daily chart. Wow, I haven't looked at this in a long time. So a nice breakout on Carnival so far. This is going to be our chart for it. I'm getting a question about Apple in the group. For those of you in the group, what's the best support for Apple? Red, even though the whole market is green. Let's look at Apple's chart. Um, really between 250 and 260 is going to be the best support area. There is a small support here around 265. Really, there's support about every $5 on Apple right now. 267. All right, so back to Carnival. This was our chart. So we're not rushing into entry. Again, you guys, it's still so early in the day that we're just kind of watching. We're seeing what's moving. It's Friday. We're starting to create our watch list for next week. So Carnival is looking to be a pretty strong contender. You could see a beautiful breakout. I think this might have a bit of a high. Yeah, so 5% short float, which sets it up for a possible short squeeze. 5% is not a lot, but it's still significant to the point where people may close out of their short position and push the stock even higher. So top contender into next week. Let's jump into its financials a little bit. So stock is trading at a price to earnings ratio of 14. Now, a young company, I wouldn't worry so much about a price to earnings ratio, but because Carnival is such a old company at this point, I do look at the price to earnings ratio because it gauges how well they're doing in terms of profitability. And then I always like to compare it to other companies in the same industry. So Carnival, we have Norwegian, which is NCLH, trading at a 16 price to earnings ratio. So right around the same. So that tells me something about the industry. The industry may just be, may trade around that range. Let's see, what else do we have? What are some other popular cruise stocks? We have Royal Caribbean as well. So let's see what else Royal. Oh, so Royal Caribbean at 19. So Carnival actually trades at the lowest price to earnings ratio. But what I will notice is that there's a pretty big discrepancy between the market cap for all these companies. So Carnival trades at a market cap of 39 billion. Let's call it 40 billion. Uh, Norwegian trades at a market cap of 10 billion. And then we have what was the third one? We RCL. So and then we have RCL that trades at 80 billion. So with that being said, we want to move on to revenue. So the discrepancy could be because one of them makes a lot more revenue. So we have RCL, which is Royal Caribbean, making about 4 to 5 billion dollars per quarter in revenue, while Carnival makes about 5 to 8 billion dollars. So this is half. The company was worth half Royal Caribbean, yet they bring in this more revenue. Let's look at how they're doing in terms of net income. Carnival generates pretty inconsistent net income, which is probably why investors aren't willing to pay as much for it. Let's see if Royal Caribbean has more consistent income. So, yes, slightly better, but not significantly better. Balance sheet, we have 40 billion versus 30 billion. Carnival, just about the same in terms of positive equity. Cash flow at 3 billion. RCL is at 2 billion. So that tells me one thing: either Royal Caribbean is extremely overvalued or Carnival is extremely undervalued. I'm gonna go with both. I'm gonna go with Royal Caribbean might be a little overvalued, while Carnival might be slightly undervalued, especially given the price to earnings ratios. So maybe price to earnings ratio for the Carnival needs to rise up to about 17, which can give it a pretty good runway. So I'm liking Carnival a lot for next week's official watch list. We might be looking at an entry over the coming days or the coming weeks. Super solid stock so far. That explains the big move after earnings. I'm gonna go ahead and set some resistance points, some support points. So, and then CCL added to watch list. Solid. Those of you who joined that Medline trade, are there any other watchers on here in it? Look at this thing go. Crushing it so far. We got in on the first day. So I took some profits on Medline, you guys. Yeah, that Medline move is insane. We are in this thing. Remember, our price target on this is $44, so it's coming pretty close to it now. See if it gets to that 44 mark. Wow. You guys seeing this? This is insane. That is a 48% gain and counting. This is about to be halted for sure. What is going on with Infosys? I don't know. Let's see what's going on with them. I'm not seeing anything specific. That's insane. Infosys stock. Wow, what a crazy move on this. It's halted. It's gonna get halted at least. Beautiful move from IBM today. We are holding IBM. Big move, big recovery. It's a big AI agent stock, so I'm glad to see that that's recovering. How dangerous this stock is. If you got in at 30, boy, you're really stuck right now. Still can't see why this is moving. Infosys. So let's see. Forgetting all of those stocks. This is a pretty big mover. Lunar is a pretty big mover right there. I might switch this because I'm not going to trade Infosys. It's too volatile, but Lunar might be a good one to trade. Big breakout above that 12.80 mark. pretty good market so far today. We have a pretty big bounce across semiconductors, which are literally the leaders of the market. When we look at SMH, let's pull up the semiconductor index. We can see that it's significantly higher today. It's trading about 3% higher, more at its peak, continuing its reversal off that 338. So we might be setting up for a pretty big bounce on these semiconductors. Hopefully into Christmas, we might just get a short Christmas rally. If we do maintain strength today, SPY is currently just below this mark, which it needs to close above in order for it to regain the overnight uptrend. But so far, we're looking good. SMH might even be considered a pretty good play. So we're going to add it to our watch list. I see your question about Boeing. It does look solid. You know, that is something that I've been kind of going back and forth on, is averaging down on that Boeing call. I would consider it once, because you see how there's this triple top that sent us below that 100-day moving average. This was a huge rejection for Boeing, which means that this is going to remain a strong resistance, and it's retesting that 100-day moving average right now. I want to see it break out and hold for a few days. Today's Friday. I really wouldn't pick up an option on a Friday. It just doesn't make sense. You're kind of wasting 2 days of burn over the weekend. So perhaps sometimes next week, if Boeing can break above that 100-day moving average and hold that level as it did here with the 200-day moving average, then I would consider adding more to my Boeing call. Right now, still holding the same call. This stock is I'm highly confident is going to be one of the stronger stocks next year, especially as they really, come back from all the mishaps. They increase operational efficiency. They increase deliveries. There are orders from all over the world. So I still think Boeing is going to be a big winner. I'm bullish on the call. I hope we bought enough time, but I'm still also holding my shares at an average of about 168. So if you're not in shares, this is also one to consider taking shares on if you want to capitalize on the bigger move. But definitely, uh, in terms of the option call, I don't want to add anything on a Friday for options, but I do like Boeing for a potential move or add more to that call if it closes above that 100-day moving average going into next week, which is this gray line right here. Hey, Dave is here. Dave, actually, since you're on, I'm sorry, to Sponger, can you remind me who you were? I'm sorry, um, I can't remember. I know you told me yesterday, but I need to remember. That way I just remember who I'm talking to. Um, Dave, check this out. I actually thought of you this morning. Oh, Raphael. Okay. Um, Look at this. I'm drinking out of a Lisbon mug, drinking coffee out of a Lisbon mug. I thought you'd find that interesting. Speaking of drinking stuff, I'm going to make my shake. I'm going to leave you guys with these charts up. Um, but maybe I'll leave you guys. Would you guys? So let me know, you guys. That way I can, when people join this group or like join on the YouTube live, do you guys think I should have these charts up, or do you guys think I should have a chart up like this, where like it's showing levels, um, or like the charts that I'm kind of watching right now for entry? What do you guys think would be a better look? Either this, I could put SPY here with some levels, or I can focus on the stocks that we're watching for a potential swing entry. Let me know in the chat. There's only two of you, so I would love to hear your opinion. Okay. Okay. So probably the swing trades, right? Okay. So Dave is saying that one chart is better for him. Split window is good. Okay. So it's mixed. Clearly, it's probably better if you're watching on a computer. It's different. You know what will probably make this give us a little bit of insight is finding out eventually as we get more viewers what's their watch preference. Are they watching on a screen or are they watching on a computer? Because if they're watching on a computer screen, then this is certainly a lot more, stuff to watch for. But on a screen, on a phone, it could be a little difficult. I'm going to leave it as is for now, like this, and then we'll play around with it. We'll go back and forth. But I'm going to leave you guys just for maybe 5 minutes. You guys can see me in the back. I'm going to be making my shake in the kitchen right behind me. So I'm going to leave you guys here. I'll be right back. All right, what's up, guys? All right, we have more viewers. That's exciting to see. Carnival still crushing it, still a top contender for next week's watch list. Um, really one of those stocks we already discussed its financial position. We discussed it against its competitors, and it looks like it could be a potential winner. Lunar. Let's dive into Lunar a little bit. So this is let's see what this company does. So it's like I've covered this before, and it looks like I had my resistance around 1410, and it looks like it's actually right back at that resistance. It still hasn't broken out. You see, this was when I covered it, probably before this whole thing happened. It was rounding out. It got to that 1410 and it rejected itself. So here we go, rejected again. And is this the triple top or is this going to be the actual breakout? We won't know. So let's clear a little bit of these drawings and let's first dive into what this company does. So obviously, we want to know what a company does before we get into a swing trade because we're holding this for a few weeks or a few months at a time. We want to know what it does, how they are against competitors. Are they fundamentally strong? Can I hold them through big drawdowns? And should I average down if it gives me an opportunity? So, Intuitive Machines is a space exploration company, service, infrastructure, contribution, establishment of infrastructure, helping develop deep space commerce. So, space is a big deal. Space is a big deal in for the Trump administration. Intuitive Machines is a top contender for a NASA lunar terrain vehicle contract, potentially valued at $4.6 billion. So, a company that's able to take things to space right now, that's a pretty big deal because that's a race in the world, and the United States wants to be ahead. The only drawdown of investing in such a business is that it is still deeply speculative. You know, these are still very low revenue companies. You can see Intuitive Machines is making about $50 million a quarter. That's nothing compared to companies making billions like the Googles of the world. So when you're categorizing this in your portfolio, your Googles, your Microsofts, your Nvidias, and your SPY, for example, should take the larger position. Intuitive Machines on the higher risk end. So you want to keep that in mind as you're making your analysis. This is speculative. It has high return potential, but it's also high risk. The company has been losing money, but they are improving their net income. They haven't been profitable yet. Balance sheet is positive, not bad. Free cash flow is negative, which is okay for a small young company. 435 employees, so a fairly young small company, $2.5 billion market cap. I do think that there is possibility that this breaks out further, to be quite honest, especially at a $2.5 billion market cap. I know that that might seem expensive for a company like this, of bringing in a small amount of revenue, but the market is willing to pay higher right now for a lot of companies. Let's look at the charts. So this is not definitely not a company I would, take a large position over because that would make me lose a little bit of sleep. So it's one that I would take a small position in, and potentially scale up if I like what I see. Um, Let me go ahead and create some charts here. 1515 is going to be my resistance on Lunar. And then my second resistance is going to be 17.35. And then last resistance is a pretty big jump, which means that there's a lot of upside potential here. And then support, I'm going to put around 1165, which is the low of day from this gap up. So we want to see it hold this gap up in order for it to maintain a strong swing position. Let's move these a little bit. I'm super precise, or try to be super precise when it comes to these resistance and the way the chart looks. So I love Lunar right now. It's a really good looking setup. I might enter very soon. Getting a question here in the main group. So I'm actually going to create a setup around Lunar, and you're gonna see how I create the setup. I'm not gonna write up the analysis right now, but I am going to, I am going to create the setup at least. That way you can kind of see. So we have intuitive machines, Lunar entry is gonna be around 13.50 to 14. Stop loss, I'm going to manage manually because I'm going to only take on an entry position. Price target is going to be, what did we say, 15.15 to 15.20. And then second price target is going to be closer to 20 and 23. Swing trade, only taking a starter position, and will add more if it breaks above 15.15. I'm sorry, that's what it is. So 15.15 and holds well. So the price target is actually going to be 17 to 17.50, and then the breakout is going to be 15.15. That's where we'll add more because it shows more strength. I will be writing an analysis on this over the weekend and sharing it on Sunday morning. Watch this. So let me enter this on my end. Active trader. I'm going to start with a small position. Okay. For those of you that just watched what I just did with Lunar, was that helpful? I don't know if you guys are on or like paying attention, but if you are, was that helpful? Do you like the way I structured that? So we went through the company's financials, we went through the technicals, we kind of talked about how risky it is, why we like it. Yeah, cool. I'm glad that you think so, Raphael, because really, if you guys can see why I'm doing things, it really helps you build conviction, and then you can take on your own trades. That's the entire idea, is that you don't want to rely on someone, because once you're able to do this more, and be on your computer and do the research, you'll know what questions to ask, which is really the essence of all learning. If you know what questions to ask, then then you're looking for the right answers. So getting a question from our main group on silver. So I'm going to go ahead and tend to that, and then I'll return. For those of you in the chat, you can see the question. Silver. Can't blame him for asking. I mean, silver has just been insane recently. What a rally. You see this? That's a crazy chart on silver. Oh wow, we have so many viewers on right now, you guys. We have 6 whole viewers, 7 at some point. Dave just pointed that to me. Let's see. Let's see if we can get more. We want to teach you people how to do things. I want to deliver the right message. I want to have people who who potentially join me on this YouTube. That way you can see the discussion between people who know what they're doing. Hopefully this helps. All right. For those of you who are on, feel free to drop your questions if you guys have any questions. That's my cat. That's Logan. For those of you who don't know, he's always here. He's always on my desk because he is. Let me see, Logan. Come here, buddy. Yep, this is Logan. For those of you who don't know, don't step on anything, Logan. Come here, buddy. So for those of you in our group, we just got into intuitive machines. For those of you not in our group, consider this just a free bonus play. We'll be managing this for our members throughout the week. We expect to be holding it for a few weeks. So I believe Medline is very close to our price target. Excuse me, sir. Medline is our at 43.88 is at its highest, and our price target was 44. So we already took some profits, still holding the position. I do expect this to possibly continue going up, but it's good to see that it's about to hit our price target. I'm going to go ahead and place an alert here at 44. And then we did get into a new position just now into Lunar. He's an active one. I need you to chill out, Logs. Yeah, you like the tune, Dave? Man, I spent last night just watching like 70s and 80s rock band live performances across the US. And I you know how it started? I was scrolling through Instagram and I saw Prince at the Hall of Fame. He had a guitar solo. It's like an infamous guitar solo. And he went off for 3 minutes on this solo. And it's such a good solo that I started an entire like rabbit hole dive into rock music, and this is this morning's influence. You know, shout out Prince, the man with aura. Yes, indeed. Remember, we need that close above 680.74 today on SPY in order for us to regain that overnight uptrend, and it looks like we are so close. That would also put us above. It wouldn't put us above the 10-day moving average, but it would be nice to regain that 10-day moving average, which is this blue line right here. It could really restore confidence and put us above all key levels. It's looking good. I mean, portfolio is doing real well today. We're up significantly from yesterday. Bounce back across all stocks. I'm super upset that we got shaken out of Ethereum. Literally, we closed right here. That was our 10%. We had a stop loss of 10%, and we closed right there. Um, what a shame. I mean, it is what it is. Sometimes, you know, you have to just do what you have to do. But we literally closed right here, and this thing bounced. Oh, I'm getting a WhatsApp call. I'm gonna go ahead and cancel out of that. Yeah. So, anyways, Ethereum is bouncing back, but um, we're still holding HUT, which is part of the crypto industry. So, I'm hoping this breaks out for us. It's right around break even right now, just a little break below break even. So, I'm hoping this breaks out. Kind of a shame because I really like Ethereum and everything that's happening on Ethereum. Remember, poly markets, prediction markets, all of those things are starting to get built on the Ethereum network, which gives it more um, which really gives it more trust among investors. That's probably why the reason we're seeing Bitcoin take such a sharp hit recently, because Bitcoin's use value has not been as apparent as Ethereum's recently. I mean, yeah, they're building the contracts, the ERC2 contracts. With Ethereum, you're also getting the, like I said, poly market, prediction market. Their blockchain is going to be used to store value, which is going to generate more revenue for the Ethereum network, which actually puts a use case for it. So I know we got stopped out, but I really want to get back into Ethereum. So SPY, it looks like, failed to get above so far that 681 mark. Let's see if we can get above it, Rafa. We have to do it soon if we're gonna do it, or else I think we're gonna see volume die down today because it's Friday. It's gonna be a holiday week next week, so I think we might see volume die down very soon if we don't get a breakout. Portfolio continues to bounce today, so SPY at 680. Portfolio is up significantly. All of our trades are doing good. The only thing that's coming down is gonna be Albertson, but you remember why we took Albertsons, right? So this is a consumer defensive company, right? In the past few weeks, the market has been very unstable and uncertain around valuations, and so money would naturally go to consumer defensive companies like Albertsons, Kroger, and so we took this on as kind of a hedge. And I do like the company's fundamentals overall. If you remember, we actually did an analysis on this on Centbis, and we suggested that this might be a undervalued company, especially compared to competitors. Albertsons trades at a very low price to earnings ratio and an extremely low price to sales ratio. Yes, that's because it's not a growth stock, but at a 10 PE and only 0.12 PS compared to a company like Kroger that's trading at a 57 price to earnings ratio and more than double the price to sales ratio of Albertsons. I would say that Albertsons is definitely a buy, especially considering the company generates a ton of revenue. Margins are thin, but that's normal for a grocery store. But the company at $9.5 billion is definitely worth buying. You can also see that insiders have more than close to 30% of shares. So very good company. I would definitely keep this one on watch. And we are holding that position still if you're part of our premium group. All right. So I'm getting a question here from Esteban about good books that I would recommend for the market. Let me kind of go through these. I sent them to you, Esteban. I sent you the the books, but let me go ahead and just kind of show you which ones I'm talking about and why. We have a beginner's guide to short-term trading, second edition. So this is going to be really good for technical analysis. Um, as you know, we use a hybrid of technical and fundamental analysis. So the books that I'm about to tell you, are going to be a mix of both worlds. I definitely recommend this one. It's a pretty short read. It's an easy read, but it teaches you a lot about the technical analysis, charts, patterns, and oscillators or indicators and stuff like that. Very good book. Trading in the Zone is going to be a fantastic book because it kind of takes you through the psychological aspect. So I would say solid choice if you want to master the discipline. So I would start with A Beginner's Guide to Short-Term Trading, move into Trading in the Zone, because then it will teach you like the psychological aspect behind trading, because there's definitely a lot of psychological effect because you're dealing with money, and it takes you years to really harden yourself to not be so reactive to market fluctuations. Trading in the Zone will build a good foundation for that. Those are the two that I would really recommend for the technical and psychological aspect. But to really give you an idea of like the fundamentals and the heart of the market, you need to read a little bit of a more boring books. A History of the United States and Five Market Crashes, Stock Market Meltdowns That Define, I believe, the United States History. Fantastic book. I listened to this one. I didn't read it. I would say read the first two and listen to this one, because it's long, it's boring, it's economics related, but it will really teach you a lot about the insides of the market. A Random Walk Down Wall Street is also another good one. I have the yellow version right here. That's a great book. It teaches you all the different approaches that people take to the market in order to make money. And then finally, mastering the market cycle. Howard Marks is a fantastic author. He's very credible. Another solid book. So far, what we have is going to be recommended market books. I'll write these out so that way everybody can see them. Hopefully that helped. If you're watching, these are great books. By the way, there's more, but these are great starter books. All right, I shared the books for you guys in the main group, in the watch list group, for those of you who are paying attention. Boeing is just absolutely beautiful today. I'm so happy to be in this position. Remember earlier we talked about Boeing needing to cross over that 100-day moving average? It looks like it's piercing right through. Let's hope it holds. I would love to see it hold, open above it next week, and continue that push. One of the strongest stocks, a lot of positive catalysts this year. It didn't do much. You could see it dip below that breakout that it had, and then it regained. This could have been a liquidity grab before the stock continues its rally. Let's see how it's doing on the weekly charts. Yeah, the stock hasn't done much in 3 years, but in these 3 years, the company has improved a lot. Revenue, profitability, orders, backlog, literally everything in the book is going for them. There's no reason it shouldn't rally unless there's a very negative catalyst that comes out. But overall, it's looking like it's going to be one of the stronger stocks. Remember, we export our exports matter a lot. This is why the Trump administration is so gung ho about getting these planes delivered to other companies, to other countries. Um, if our exports count towards our GDP, so the more we export, the more an American company like Boeing exports planes, the better our GDP looks, which is something that Trump and his administrations care significantly about. Boeing could easily be a $300 stock. All it takes is one strong catalyst from this point into 2026 for it to move higher. All is looking good. I'm not, I'm definitely bullish on the stock. I'm holding shares, and I'm not willing to sell unless there's a significant negative catalyst that alters the stock for me or alters outlook. Yeah, I know. Yeah, you're long BA. Yeah, me too. I'm glad you're long with me. I have an average around 168, which is really awesome. It looks like we entered this yesterday. This is take two. This is the Grand Theft Auto stock. It looks like we're up since our entry. The stock is pushing higher. This stock has already seen a big gain in the last 12 months, but as Grand Theft Auto's release date gets closer, I think we're going to see even a bigger move. Yes, they delayed it from May. They delayed the Grand Theft Auto release from May to November. But honestly, as an investor, that's a good thing because that is so strategically ahead of the holidays. It's going to sell out. It's going to drive up billions of dollars in sales. And Grand Theft Auto is a game that people have been waiting for years. And so I believe Grand Theft Auto 4 or Grand Theft Auto 5 added $11.8 billion dollars or something to the company's revenue, which means that Grand Theft Auto 6, which is the newest one that's coming out next year, is only going to add more. Plus, of course, their NBA 2K and all the other franchises that they have. Um, Bullish on the stock. It's been rallying for 3 years. Next year might be its final year of a really big push before it cools off from the anticipation for Grand Theft Auto. But still bullish, holding the shares. Medline is so close to our price target. Look at this thing. It's so close to 44. This we set this price target on it when we got in on the 17th. 44 price target. So close. So very close. Who's in Medline that's watching? Would love to know what you guys got in at. What's your average? Look how beautiful the market looks today, by the way. Look at all this greenery. It's like a garden. Beautiful move. Non-stop rally today. It's beautiful. Lunar, we're already up on this. We're up, all right, 1.3%. Medline, we're up 15% on Medline. What a beautiful move. Take two up 2%. IBM is coming back. We're not up yet. Nvidia coming back. Pretty significant day though. Love to see a strong rally like this ahead of Christmas. Sets us up nicely. Hopefully SPY gives us that close above 680.74. That will really boost confidence going into tomorrow. By the way, for those of you who were watching, I am on the West Coast. I'm in California. So it's very early right now. It's 8:30 in the morning. I'm not sure where you guys are, but if you're looking at my timestamps here, you'll see it says 7:58 a.m. That's when I sent this lunar setup. Um, that's because I'm on the West Coast. Where is everybody from? New York. Yeah, I figured it's mostly New York in our group. North Carolina. Let's check our watch list. Let's check our scanner again to see if there's anything worth adding to our watch list. Lunar, we already added. CoreWeave up 17% today. Not my favorite stock to play, so I'm just gonna avoid it for now. Too messy. Applied APLD, Applied Digital. That's one that we added to our watch list already. NBIS, that's a similar kind of play to Applied Digital. DJT, too volatile for me, not enough backing. SGML. Lithium is moving today. That's interesting. I'm gonna put that as a theme. Lithium theme. Planet Labs. That one just had a pretty strong earnings breakout. So it'll be interesting to put this one on. I think I'm gonna add this next to Rocket Lab. Planet Labs. Yeah. which is also kind of in the same similar sense as APLD, to be honest. Tony, not a fan of the name. TMC. This could be a hint that um, these miners are going to pop again. Let's see. Serve, serve. Let's dive into serve a little bit. I'm gonna remove this here, and I'm gonna just keep these two. Um, serve robotics. So I know robotics are hot. That's a huge initiative for the White House going into next year. You can see it's a very young company. It only IPO'd in April of 2025. The company has kind of been stuck in this range for quite some time. If we put a support at 4.55, we put a resistance at 18.70, and then another right around 24.43, 24.30. So these are the highest levels it gained. And this is about the lowest level it went apart from its IPO lows, which quite honestly, a company like this, it definitely can visit those IPO lows. Don't think for 1 second that it's safe because it is a very small company, very young, in a very competitive environment and in a very costly environment. So support is going to be around 1.75 here, another support around 4.50, and then resistance is going to be around 18.70, 0.70, and then another resistance around 24.30. Okay. So now that we have our levels established, let's go ahead and dive in a little bit deeper into what this company does. So I actually am familiar with this company because I lived in LA for a little bit, and I know that their little robots are all over the place. I don't know if you've seen them. They have eyes that look like this, they move like this, and they deliver stuff. So it's a pretty nice little like website that they have going, which is really attractive to investors. You know, they obviously this is the first thing that they're going to see when they pull up something about the company. We build tech to help humans. I've seen a lot of videos of their robots getting stuck, not knowing their way. So there's a little bit of of a question mark around how effective they are. But you can see that they have some partnerships: Uber Eats, 7-Eleven, Nvidia. I think powers a part of their technology. They're safe, they're smart, but they're young, and that's the problem. You know, considering that they're young, you have to frame your analysis with that lens. $700 million company with 120 employees. So very young, very small, still kind of in its founding stage. They're generating some revenue. The revenue is growing, but you can see that losses are absolutely mounting. I mean, quarter over quarter, they're losing 30 million, 20 million, 13 million. This is an insane amount, and revenue is nowhere near enough to cover those expenses. Balance sheet, decent balance sheet, $283 million in positive equity, but free cash flow is obviously negative, which we're willing to overlook because it's a small, young company. But I will say, I wonder what their cash runway, Serve Robotics cash runway. Gosh, $210 million. So I bet you in the next 12 months, we're going to see this company make a big public offering to raise capital because they're not going to be able to continue at this rate. Very high risk. I would say it's more of a catalyst driven trade, one that you would take based on like a very strong positive catalyst for robotics or a strong catalyst for the company itself. But I don't know if it's going to succeed in the long run. There's still a lot of work to do, a lot of money to spend, and I don't know if they're in a position to spend all that money. We might end up seeing this kind of go out of business, go bust, get acquired, or if they get lucky and management does the right thing, they'll survive. But as far as their technicals go, if you're looking at very short term, you can actually approach it this way. Well, one thing I would notice is we always start on the daily chart because we want to get an idea of what the overall stock is doing. And you could see that dating back as far as back as 8 months, the stock has been so stuck around this range that nearly all of its moving averages are converged. They're all together. And that's because all the average prices over the last 200 days have been relatively the same as the stock fluctuates tightly. That's because there's a lot of uncertainty. $210 million cash runway is not a lot. The company is not doing that well financially. There's not a reason to buy. And catalysts like robotics can only last so long against a company that's not doing that well financially. So I would say your support is going to be right around that 950 mark, another support around 8. And so if you're in, those are going to be your stop losses. And if you're going to have a breakout play on it, it's going to be above 1055. You can potentially catch a day trade on this. I would be very careful on swinging anything of a big value. So 1055 is going to be your breakout, and your price target is going to be right around 11 to 1110. So I hope that helps with Serve. Now let's move on to to RR, which is Rich Tech Robotics. So I believe we played a trade on this not too long ago, but RR, we have our support at 2.80. Right away, we can see this big reversal. So big sell-off, big reversal, making this a very significant support. If it breaks below this support, we're expecting it to fall probably closer to 2.38 or so. So those are going to be your support points. You know what? I'm going to move the support down to this point because this was the big reversal, but you can see there was a big, strong candle here at this level that was accompanied with strong volume. So I'm going to make the support 2.55, and then I'm going to move this support down to this level here. So 1.88 and 2.55 are going to be your support points. And then we're going to dive into the company's financials and fundamentals shortly. Resistance is going to be 4.85. All right, I'm going to plug my laptop in real quick. 1 second. Resistance is 6.45. It's going to be a long shot for this company to make it back to 6.45 without a significant catalyst, by the way. Um, all right, so now let's move on to. I'm sorry, I had to plug my laptop in and move things around, but Rich Tech Robotics. So visiting their website, I would say I already like this a little bit more than Serve just because it has an industrial use and it's really easy to get industrial customers to sign up for something that can save them money. So Serve is more of a public use. It's going to be a harder logistics thing to adopt. But with this, it has an industrial use. So there could be a very strong positive outlook for them. I don't know how clunky it is. It's a bartender that makes you cocktails. I don't think anybody out there wants a bartender to make them cocktail. It seems like it's more of like a fad, like, oh, you have to check out this new place. it's one of the places in town that has robots. You know what I'm saying? I don't think if the customer is yet ready for something like this. But something like this where it moves tires for someone, that could be a lot more useful, especially if it has other use cases. Cappuccino might help, but in terms of like taking out the human aspect of like a human facing job like bartending or even serving, I don't think the customer is going to be too happy to be served by a robot, especially one that probably doesn't work that well yet. Let's see how the company is doing in terms of its fundamentals. First of all, Las Vegas. Okay, it's located in Las Vegas, 57 employees, very small company, super small. I mean, that's nothing. 700 million in revenue. So they're keeping it light, which is good news. They're not hiring too many people. I mean, there is revenue, but there's none. You really. Their burn rate is a lot less than Serve, so they're not burning nearly as much cash as Serve Robotics, which is good news. And then balance sheet, pretty decent amount. Free cash flow is negative, which is okay. Let's see. Rich Tech, Robotics, Cash Runway. Cash on hand, 85 million. They're burning about 5 million per quarter. So not bad. Okay, so they're doing a lot better in terms of controlling their spending and cash burn than Serve Robotics, making this a stronger contender. But it's still super speculative. I would say that these two will give you decent exposure to the industry or sector. Or let me look into an ETF. Let me see what robotics ETFs on the market are. But in the meantime, I will say Tesla might be a good robotics play. If you're not already in Tesla, remember Tesla's whole thing is humanoids after cars. So that is something that you guys that for someone who wants exposure into robotics, that could be one. But other than that, you can get into Robo ETF, and if we look at their holdings, robotics ETFs. It looks like their holdings consist of Teradyne, a big robotics company, and then all these might be offshore, Coherent, Intuitive Surgical. So I love that. So Intuitive Surgical is actually a company that we covered in our analysis. iSurge. If you want entry into robotics, this is a company to definitely consider because they're in the medical field and they do robot assisted surgery. Um, let's see, robot assisted surgery, um, and they have what they're called is the Da Vinci surgical system. So we covered this in September, okay? And the latest version that arrived in 2025 has 10,000 the computing power. So remember, there's not only a transformation happening in technology, there's a transformation happening in biotechnology. And this is a company that delivers on that the medical use for robotics. And their Da Vinci system is already successful, and they released their latest version. Um, and they're delivering 147 systems. That may not seem like a lot, but these are very expensive systems. And they are doing well. Like if you compare a company like iSurge or Intuitive Surgical, a company that's generating 2.5, 2.4 billion and is profitable, to a company like Serve Robotics, you know, what would you rather park your money in long term? I know there's a lot more upside to a company like Serve Robotics or Rich Tech, but in reality, a company that's already successful in this space should take more of your capital than a company that's not so successful in this space, especially a company like Intuitive Surgical that's already proven itself to the medical world. So let's see where it's at right now. So Intuitive Surgical is actually far above our price targets. It never gave us that pullback. That's the problem here. Is I was waiting for this pullback and it never gave it. So we might have to actually take a later entry on this one. I'm so glad you asked me about robotics because I forgot all about this company, and I think it might be a winner in the coming weeks. So I'm definitely going to add it to my watch list. So Illumina, that's another one. So, if that's what I like to do. If you want to get an idea of where to put your money, you can put it in the ETF or you can go into its holdings because the people managing the ETF, they know what they're doing. These are very high paid people that manage these funds. And if they know what they're doing and these are their holdings, you look at the top 10 and you can get an idea of what they're holding. So the ETF long term will give you exposure, but its returns will be more limited. You will have to pay management fees to the people managing the ETF. But if you're looking for where to put your money in, go into that ETF, look at those companies, analyze them, and see what they're holding. But you will notice that these ETFs may still hold the rich tech robotics and the serve robotics of the world, the higher risk. But you'll see that their allocation towards those stocks is a lot lower than their allocation to a company like Intuitive Surgical. I hope that helps, Raphael. Wow. Lunar is crushing it. We are up 3%. Did you guys catch the Lunar entry? Raphael, by the way, you're so welcome, man. I appreciate the questions. Like the market it's exciting, but it's not like there's always something to like hype things over. It's so your questions are welcome. They give me a good talk track. I like going back and forth with you guys. It helps me get to know you, what you're looking at, and what I should focus on as a group too, and how to structure everything. Joby, let's see. Let me pull up Joby here. Let's pull up the charts. So right away we have a support around 1175 that dates back to this big candle right here that led to this breakout. So that would be your support if you're into if you want to have a stop loss on it. Resistance is going to be 1715, and then another resistance right around that 20 mark. So that's going to be, those are your levels if you're paying attention. And let's go to their financials. Yeah, so we already know what this company does. Let's look at their website briefly. I've already visited this website a few times. Design, our story, careers, investors. Let's see if they have anything for investors. Latest news: 25 vertiport sites across the US. Okay, so that's not a lot, but it's a start. Government Advanced Air Mobility Plan is a pivotal step towards commercial launch. Joby announced its plan to double manufacturer capacity in the United States. So if they're getting manufacturing, more manufacturing is good news. Okay, so do you see this? Operational momentum towards FAA certification. So until they have that certification, the company is really going nowhere. They might have a chance at international markets where somehow regulations are a little bit lower. But until they get that certification, it's going to be a tough, challenging thing for them. But luckily for them, we have President Trump in power, and he really just has been okaying a lot. So perhaps Joby's year and Archer Aviation's year is going to be this year. It remains speculative. If we look at their financials, $13 billion company, about 50% of its shares are held close. Not much revenue. The burn rate, I mean, $400 million of cash burn last quarter. Positive balance sheet, free cash flow is deeply negative. Joby Aviation, cash runway. 1.5 billion dollars. So they burned $400 million last quarter, 325 million the quarter before. Which is their steepest burn rate in a lot of quarters, and they have 1.5 billion dollars. So they might need to raise money soon, which would dilute the stock price, which would bring down the stock price. So that's possibility, and that's the only possibility, unless they get some kind of outside investment. I don't know if I necessarily like this for a long-term investment that I wouldn't lose sleep over. It's certainly a high risk, high reward play, speculative with a lot of upside if they grant approval. And just like robotics, it's susceptible to the any catalyst, whether positive or negative, to the overall EVTL industry. So anything that has to do with EVTL, whether positive or negative, is going to influence the movement. This is more of a long shot. Right now, it's not displaying a lot of strong signals. But since higher risk stocks on the other parts of the market, like nuclear, like space companies, are starting to push, maybe these EVTL companies are also going to get a push. So if you want to take a trade, 1175 is your support. You can put a stop loss below that level. First price target is going to be around 17 for Joby. All right, guys. Well, for those of you who joined, I appreciate it. It is 9 a.m. here, which is 12 p.m. I was only going to be on for the first 2.5 hours. Thank you so much for joining, you guys. I'm going to end the stream very soon. If you have any final comments or any recommendations, please tell me in the comment section, and then I'll be happy to answer them next time. But I will be back on. I'm going to try to do this every day, Monday through Friday, at least for the first 2 hours of the day. If it's helpful, I appreciate you guys hopping on. Thank you.